it's through those systems that these people are able to acquire such large amounts of property in a single year. So it's very important. It's not necessary to succeed at all. You can be very inefficient with your time. And hey, you know what? If it takes you a year to buy a house and you just buy one house a year, you have a fantastic retirement plan, right? That's for sure, right? If you are interested in more of a focus on real estate as less of a retirement plan and more of a I want income now plan, then you're going to probably want to acquire your properties faster than one per year. In order to do that, you're going to need other people's money. You're going to need a really good help with the legal and financing side of things, right? The financing side, obviously, working with mortgage brokers or working directly with lenders to get you the money to buy these things, right? That's going to be important, right? Then working with a good lawyer, having a good system. If you're going to use other people's money, I mean, there are a variety of ways to do that, right? You can borrow it, right? Which is what the mortgage broker is there for. Even if they're, private lending situations, uh, you can also, of course, joint venture it, right? You can say, hey, I'll go do this deal. You just give me the down payment and then we'll split the profit, kind of a thing, right? That's also an option, in which case you need a good lawyer, right? I guess technically you don't, but you should definitely do joint venture deals with a good joint venture agreement in place. There are a few exceptions to that rule. I wouldn't say it's hard and fast, like you must always have this. You can use your discretion, but usually you're going to want that in place. It's probably better if you always have that in place, although some people will do a deal or two starting out with some family members or some really close friends. And if you judge that you trust those people enough that you don't need a contract, then by all means, really a contract is not very valuable for enforcement. It's not really the purpose of a contract. The biggest value that a contract brings to any kind of business dealing or relationship is that it clearly outlines who is responsible for what, right? It clearly allocates responsibility, liability, etc. in your project or forgotten what they agreed to, and something comes up and there's a dispute, rather than getting into a fight or arguing about it, you can go back to the contract and you can simply read, who's responsible for what. That's the biggest value of a contract. People who are not successful and probably will not become successful unless they have a shift in mindset tend to think that a contract is something that you use to like beat someone over the head with, that you can use it to enforce things upon people. And you can, if you have the resources, you can do that to some extent. I mean, you can certainly hold a contract over someone's head and kind of say, hey, you owe me this, and within reason it works. The problem is that enforcing a contract is extremely expensive. And so usually if you want to use a contract to beat someone over the head, the cost you'll incur of doing that will be larger than the benefit you gain from beating them over, right? So most contracts are really not structured to enforce something upon someone so much as they're structured to outline what everyone has agreed to do. And the hopes, and this is true of all successful contracts in all industries, period, go ask any lawyer, the most successful contracts are never litigated. They are agreed upon and all parties are honest in their dealings and uphold their side of the agreement. Those are the best contracts. And obviously, what I just pointed out there is that a contract is completely unnecessary, right? Because the best contracts are the ones where all parties do what they say they're going to do, and therefore they don't actually require a contract, right? And so that's kind of the catch-22 of contracts, is that you can use them and you should use them as a tool as long as you understand what they're there for, which is not so much the enforcement side of things, it's the clarifying who's responsible for what side of things, right? And what that means is that if you are going to partner with people, if you are going to joint venture, right, you need to make sure that you understand you're joint venturing with people. You're not probably going to be able to use the contract to enforce that they do what they're supposed to do. So you want them to be people who are committed to doing what they're supposed to do, right? Holding up their end of the contract. Um, But these are the ways that you can get access to other people's money, right? And then through that, you can leverage that money to grow your investing, right? And this all comes down to mindset, something that I talk about all the time, right? Um, your mindset is obviously going to frame how you look at every problem, or at least the problems that mindset pertains to, right? And it's more or less going to determine how you see the situation, right? If you have a mindset that a contract is used for bullying people into doing what you want, you're going to get yourself into agreements with people who you think maybe don't have the best character or aren't the most likely to follow through on their commitments. But then your plan is going to be to beat them with the contract when they don't. And then when you're in a joint venture with them and they do something that costs you $2,500, right? And you realize it's going to cost you $23,000 to enforce the contract on them, you immediately realize that you've made a mistake, because either way you end up losing a bunch of money, right? And so this is just something that people need to be mindful of, and this is something that your mindset is really going to be important for, right? Is understanding clearly what this tool is and how it can be used, how it can be used to your advantage or how it can be used to hurt you, right? And that I just gave you a perfect example of how it would be hurting you, right? Getting a false sense of security from the fact that you have something written on paper and assuming that you can use that to cause people to behave other than the way they normally behave, right? If you know someone to be lazy, don't assume if you make a contract that says they'll owe you a bunch of money if they're lazy, that they'll stop being lazy. There's a good chance that they won't stop being lazy, and there's a good chance that depending on how your contract is constructed, the amount of money you'll extract from them will not equal the amount of expense it costs you to execute the contract, right? Because you need to involve lawyers, go to court, it takes time, blah blah blah. I mean, it depends on the contract. Very weird. My lighting in here is looks like one of my LED light bulbs is going. So sorry about that. But pardon me. It's very important that we kind of focus in on our mindset, make sure that we have a very, very clear view of the situation. I think that mindset fuels something. I'm going to call it emotionality. Obviously, we're all people, we're all humans, which means we all have emotions, positive ones and negative ones, um, and they can be very, very dangerous for an investor. Uh, they're actually substantially more dangerous to paper investors. So if you trade stocks, bonds, assets, derivatives, even cryptocurrency, those types of things, emotionality is much, much riskier than in real estate. The reason being simple: you click a button to buy and sell with stocks. It takes time to buy and sell with real estate, which means that you can get emotional and make a decision that costs you a lot of money in a matter of minutes with the stock market or the cryptocurrency markets. Whereas, if you become really emotional about real estate, you're going to have to remain in that state for probably several weeks or months before you can actually liquidate your position and cause any damage, right? Or start buying things irresponsibly and cause any damage, right? Uh, but your mindset is going to fuel your emotionality, and for an investor, emotionality is one of the most important things, or a lack thereof. Investing is not an emotional activity; it is a rational activity. That is, there's a certain math and logic to it, and those are the things that should be making your determinations for you. Those are the things that you should be making your decisions based on. Your emotions, whether that is, you feel crappy because you were in a fight with your girlfriend this morning, or whether it is you feel crappy because you were watching CNN and they say that the sky is falling, or whether you're feeling exuberant because you were watching some YouTube trader and they were telling you about how you can make $1 billion on GameStop, right? Whatever it is, the emotion is obviously not the thing to make the decision off of, right? Here, looking at our own real estate market here in Canada, Ontario, we saw approximately 20% price increase almost across the board, but certainly in the GTA for houses in the last year. Okay. Is that rational? Right? Would you argue that there's a rational argument for the 20% increase? I would argue largely yes. Funny enough, largely yes, it was fairly rational, right? In an inflationary environment with low interest rates, Your average person was kind of looking at the spread and saying, this makes sense to me. I'm paying almost nothing to borrow this money, and I'm potentially appreciating quite a bit on the other side of the equation. That looks like a win. And to put it into kind of stock investing terms, we would say that is shorting the Canadian dollar, right? If I uh, a short, just real quick, if you're not familiar with the term shorting, it's a stock market term. To short something is to borrow against it, and to borrow and sell against it. Sorry. So, for example, if I'm going to short, let's say Google, I think Google's price is too high. I want to short Google. I might say, "Hey, Sean, can you lend me 1,000 shares of Google?" And Sean, who has 1,000 shares, will be like, "Yeah, cool, Aaron, I can give you 1,000 shares, but I want them back in 1 month," right? And I say, "Yeah, cool, no problem." Now, Sean, he's not selling his shares, he's not anything, he's just lending them to me, right? And he wants them back in 1 month. So I now have a commitment, a contract with him, really, that says I've got to give him back those shares in a month. Cool. So I take his shares and I sell them, right? Let's say the shares are worth, I don't know, $1,000 a piece, just to make the math easy, right? So he's 1,000 shares, $1,000 was that $1,000,000. So I take his shares, I sell them. Okay. Now the way a short makes money is obviously if I sell those shares and at $1,000, and then I wait a month and now I owe Sean back. I now need to return 1,000 shares to him. So I have to go to the market and I have to buy 1,000 shares. And the hope is what every shorter is hoping. The hope is that the price has gone down, right? So now that the price has gone down, I buy back the shares for them back to Sean, and I made the profit, the difference, right? Sorry, hang on 1 second. My little canine companion. Alex, get out of here. Right, so that's a short in a nutshell. In a nutshell, I borrow something, I sell it today, and then I owe it back to the person I borrowed it from. And I'm hoping that at the time I need to return it, the price is lower than what I sold it for, because then I'm making that difference, right? So when you look at the real estate market, you see that's kind of the behavior that's happening, right? If I have Canadian dollars, right, and I know that 400,000 Canadian dollars is worth one house in Sudbury, let's just say, right? Then I might say, you know what? I bet you that next year or 5 years from now, you'll need $500,000 to buy this house in Sudbury. So how about I just borrow the money today to buy this house, right? And now I'm going to borrow this money today. I'm going to borrow $400,000 today. I'm going to spend it on an asset that I think that asset's value is going to increase relative to the thing I'm trading for it, right? Which I've borrowed, and then I'll return that at a later date. Well, that's a mortgage, right? A mortgage is you borrow Canadian dollars and you return them at a later date. Oh, actually, a fixed monthly interval, right? But you return them at a later date, but you get the asset today, right? So if, for example, you have low confidence in the Canadian dollar, right? Then you can borrow Canadian dollars from people who have more confidence in it. And you can then spend those Canadian dollars on assets, right? And you can wait and hope that the Canadian dollar goes down relative to those assets. And then you're making the short money, right? So that's rational, right? When you look at what buyers are doing in the GTA, there's a certain rationality to it, right? That makes sense. Now, I bet if you ask a lot of those people, they maybe don't understand it in those terms. Neither the like complicated investor terms I just kind of use, nor in a more straightforward, like, oh, well, I don't trust the Canadian dollar. I think a lot of these people, they're just looking at short term. Hey, the price is going up, I can buy. I think a lot of it is emotionally calculated, right? But there is a rationality to it for the people. There are people who are acting rationally, even if there are also a lot of greater fools who are behaving irrationally or emotionally, right? So this is something that we need to be very, very mindful of, right? Because there is I guess there's two things really to consider. One is that there is or there should be a rational basis for your decisions, the decisions that you make as an investor, right? You should be able to sit down and say, "Here's the math. Here's why I thought this was a good idea." One of my favorite things is I've been learning about stock investing lately, which is probably the reason for the analogy. And I've invested in stocks before, and I thought I knew a decent amount about the stock market. Uh, I'd never claim I don't know stocks like I know real estate, for example. But I thought I knew it okay. I've certainly put thousands of dollars in the stock market, and I've made thousands and thousands of dollars, and I've lost thousands and thousands of dollars. So I've I've been uh, I've been on both sides of that, and I've made really stupid, like, other people tell you this is a good investment, throw some money in there, lose money investments. I've done that, and I've also made the big brain, hey, and analyze this and see something coming before anyone else does and make money off it. Um, so I kind of done all of that, and I thought I understood the stock market. But anyways, now I'm kind of learning and trying to get a better grasp, because I feel like it's just one more investment and revenue stream that I should be looking at, right? Even if it's not my primary focus. Um, and it's been very, very cool reading some of these stock market investors. It's been very, very cool, because obviously I've read a lot of real estate investors, and I'm very familiar with how real estate investors think, um, and what their rationale is for the things that they do. And what's been so fascinating reading these stock market investors is they think exactly the same. Now that's not shouldn't be shocking to anybody, because investor is in the name of both of them, right? So you'd expect them to think the same. But I mean, some of the things in which the principles underlying the success of some of these investors are so just like astonishingly simple and in your face. But because people have all sorts of mixed up mindsets, like, they never take action on these things. Like Warren Buffett, one of his key insights, and to be fair, Warren Buffett, people talk about he's the greatest investor. He's not. He's very highly overrated. He's basically a dude who's taken advantage of the fact that our governments suck and they've been stealing money from the people. And Warren Buffett, he had no control over things or anything. I'm not saying he's a part of a conspiracy or anything. No, nothing like that. But just he happened to be in the right place, and he was like, "Oh, the government's taking advantage. Let me take advantage of that." And that's how he's made most of his money. But he does some things that are, I mean, they're freaking ingenious. And one of the big things that is very important to stock market investors, and it's also, sorry, successful stock market investors. And it's funny because probably no one and I'm sure people who invest in stock, probably no one does this, is the discount. I talk to you guys all the time about trying to get a discount, right? In terms of, we analyze the property, we find the correct price, and we try to buy at that price. And people are obviously going to bid up past that price sometimes. And sometimes you have to walk away because you're not getting your price. And if your price isn't, where your analysis says it needs to be in order for you to burr, or to buy and hold, or to flip it, then it doesn't make sense, right? Someone has basically eaten up your discount, and you move on to the next property. You say, hey, go ahead, you pay retail for this. I'll wait until I can buy something for below market. Right? The goal being pretty simple: if I can pay 10% below market and sell it for 10% above market, that 20-point spread is going to make me money all day, every day. Right? Now, mindset, right? Mindset tells us, your average person's mindset tells us, well, that's impossible. You can't buy a house for a 10% discount. Who would sell that to you, right? I mean, lots of people would. Houses that are on the market, like MLS listed with a realtor, will sell for a discount sometimes. But if you're having trouble finding them there, you could, of course, try wholesaling. You could work with a wholesaler who's already negotiated the discount for you, right? There are lots of ways to find the discount, right? And the same is true in the stock market, right? Um, One of the things that Warren Buffett does, that it's to my mind, it's truly ingenious. I don't know. Maybe it's just because my eyes have only recently been open to this, but Warren Buffett, and like lots of investors do this, especially the big successful ones. But Warren Buffett basically goes to the options market, and what Warren Buffett does is he sells contracts to buy things. So, for example, Warren Buffett will say, "Hey, I want to own more Apple." So he'll put out a contract that says, I don't know what's the current price of Apple. Let's say it's $1,000. So he'll put out a contract. He'll sell it. He'll say, I will buy X number of Apple shares for $900 per share in the future for the next 3 months or whatever, right? and then he sells that to people as an insurance contract, right? Because if you own Apple and your Apple's currently, I don't know, let's say you bought Apple at $850 per share and it's shot up, now it's at 1,000, and so you've made good money, right? And you're sitting there saying, well, I'd like to, secure my gains or whatever. Well, you come to Warren Buffett, and for a few bucks per share, he'll give you this contract that says he'll buy your shares at $900. So for sure, whatever happens with Apple for the next couple months, $900 you can sell at. You don't have to worry about it going back down to 850. So you see, it makes sense. He's selling insurance. That's all he's doing. That's what he does. So at the end of that 3 months or 1 month or 1 year, whatever the term is, right? He got paid. He got paid cash money for the option, right? The insurance policy, essentially. It's an insurance premium is essentially what he's getting paid. So he gets paid that. And then he sits there and he waits and he watches. And because he's decided that Apple's worth $1,000 a share, and because he's created his option at a 10% discount, if the market becomes a little bit irrational and the price drops far enough, maybe the person he sold the contract to executes and he gets to buy these shares at a 10% discount, right? And if they don't execute, then he goes, that's okay. I collected my rent, right? By selling this options contract on these shares. I've collected my rent. I'll try again next month, quarter, year, whatever it is, right? So Berkshire Hathaway, which is his investment firm, for those of you who don't know, I think they made something on the order of like $2.3 billion in options fees in Q4 of last year, something like that. So Warren Buffett generates something to the order of like $8 billion a year off of these fees and acquisitions this way. And he does it on the reverse, right? He takes those exact same options and he sells contracts to sell. And he would say, after he gets those Apple shares for $900, he would then turn around and sell an insurance contract that says, I will sell these shares for $1,100, right? He's already decided the value is $1,000, right? So now he's just putting a markup on selling them and putting a markup on buy or mark down on buying them, and he's setting his enter and exit points, and that's what he does. That's how he became so fantastically wealthy, right? You can do the same thing. You'll understand here that what I just explained to you, please do not go on the stock market and try to do this. It's much more complicated than what I just explained. It is simple, but it's not that simple. So and options are, if you don't know what you're doing, they are a good way to get burned. So just be careful. But what I just pointed out to you is simple, right? It is as simple as listening to Tupac back in the day turn a nickel into 25 cents, right? It really is that simple, but it's not that easy. And the hardest thing is that emotional piece, right? The hardest thing really and truly is having the knowledge of self, for lack of a better term, to know that you are comfortable and that you're not going to panic, because emotionally, you're going to be in positions where you're going to want to panic, where hopefully you've done the logic and the rationale to know that you shouldn't actually be panicked at that time. And for a lot of investors, that panic is both really uncomfortable and maybe makes them want to quit. Also, something that can be very costly. Again, with real estate, it's less of a concern just because it takes so long to execute your transactions that usually you can come out of a bad emotional state before you've really screwed things up too badly. But in general, right, you want to be staying as emotionally even keeled as you can. And a big part of that is, of course, your mindset, as I just talked about. Another big part of that is, of course, having a plan. Now, there are a couple different components or aspects to having a plan. One would be something like the personal fundamental analysis sheet I sent you this week. Here's mine. I filled it out. It's totally optional. You don't have to do it. Obviously, nothing I send you you have to do. But it's a very, very good exercise. one, as you're going through like your expenses and income, you're going to realize you have more expenses than you thought you did, and you might also have more income than you realized you did, right? But it gives you a much clearer picture of where you are financially, which should hopefully make you less panicky, and less rash when making decisions, right? Because you have a very clear picture of you, right? One of the things that causes us to make bad decisions or to make decision making difficult is that it's often unclear what we're deciding, right? If I were to say, for example, the stock market, hey, pick a stock, can you buy the stock? You'd be like, I don't know enough about it, right? So one of the things we can do to make sure that we understand things better is at least know enough about ourselves, right? You should fundamentally analyze every single property that you look to buy, right? You should do the same if you wanted to buy stocks, right? Certainly, if that is the rule of thumb for buying stocks and houses, then why is it not the rule of thumb for just managing your own life, right? You should fundamentally understand where your money's coming from and where it's going as well, right? And that, I mean, the exercise alone could give you a great deal of what's the word? What's the word I'm looking for here? Um, Reassurance, I guess. Because sometimes you can see, you might have been looking at the world as in your money comes from here and it goes here. And when you do this exercise, you may realize that, oh, you know what? Actually, more of my money comes from here than I realized, and less of it goes here than I thought it did. And here are a bunch of things that are maybe optional that are eating up a bunch of money. So the money feels tight, but really, if something were to happen, I could maybe cut these things off or put them to the side or what have you, and I'd be okay, right? A lot of anxiety just comes from the fact that people don't know what's going to happen tomorrow, and they don't know because they don't have a very clear picture, right? Or they're worried about what will happen tomorrow. It's like the more unshakable. Do I have that book behind me? I don't. What a shame. Anyway, this is an investing book called Unshakable, if you're ever interested, by Tony Robbins. But the more unshakable you can become, right, then the more clearly you can see the decision space and hopefully make smart decisions within it, right? Keeping in mind, right, that for a lot of people, they're just flipping things, 10 points under, 10 points over kind of a thing. It's an extremely effective strategy. It's a little slow, right? It's not quite as quickly as like getting 50% on everything you buy. But it's very hard to get 50% on everything you buy. It's pretty easy to look for a 10% discount. It's pretty easy to try to sell for a little bit over price, right? Those are two things that are relatively straightforward. And of course, the more knowledgeable you are as an investor, right, the more information you bring to bear, then the easier that's going to be for you to do. And it's easy to forget or to think that other investors bring the same level of sophistication and knowledge to the market that you do, and therefore anything that you try to do to improve things in your side is going to be obvious to the people who are looking to buy or whatever afterwards. That is obviously not the case, right? Because I mean, we see this all the time. The markets are full of people who are willing to pay more for things. So that's that. I want to show you some analyses, but I also want to talk a little bit about the upcoming market conditions over the course of the next year or two. Um, because I think that it's important. Yeah, I think it's important that we talk a little bit more about inflation and what exactly is going on with the houses and the money and the government, right? So I was talking earlier about shorting the Canadian dollar, right? If you believe that well, no, let's phrase this differently. I think right now a lot of people feel like they don't have a lot of control. I'd ask you to raise your hands, but I can't see anybody. So, but I think a lot of people feel like they don't have a lot of control. I certainly feel that way for sure. Like if I listen to the news or I'm listening to whatever podcast or whatever crap where I'm hearing about the events of the world is, I mean, daily seeming like a crazier and crazier place. And certainly some of the things that our government is up to and I mean, I don't. I'll give you a real quick example, but I don't want to be in my politics for too long. But like last year, they spent months bleeding and complaining about Native American residential schools. Oh, it's terrible. We need to investigate. We need to Truth and Reconciliation Day or whatever crap. Okay. I'm not a big fan of these holidays. I don't like Black History Month. I don't like Martin Luther King Jr. Day. I don't like any of that crap. I don't like tokenizing ethnic groups for holidays. I'm not a big fan of it, right? Martin Luther King certainly deserves a day, perhaps because he's freaking awesome, but not because he's a black dude, right? And certainly the Aboriginal kids who died in residential schools allegedly, they don't deserve a day. Kids died in schools all the time. It's unfortunate, but those kids are not special. Anyways, we spent all this time bleeding about that crap, right? And it's a very ironic thing to me personally because residential schools are obviously horrible, whether or not we believe the claims that they were mass graves and all this stuff, which is a claim I'm not sure that I'm ready to accept. But certainly, right, it's taking away people's kids forcibly from their families to go educate them far away where they have to live at the school is obviously a bad idea, right? So whose bad idea was it? Well, what's not being talked about at all is there's a group of people. It's a historical group of people. So don't get them confused with the modern group of people who call themselves this. There's a historical group of people. They have about 150-year history or so. They're called the progressives. The progressives believe that you can use the government to change the world. Oh, what a shock. Does that remind you of anybody? Well, the progressives thought you could use the government to change the world, and they thought that the savage Native Americans were savage and needed to be educated. So they set up the residential school system. And then all of the people who were really happy to have the government interfere in other people's lives cheered for that system. And that's how we got the residential schooling system, which of course is not talked about at all. So we bleat and we moan about this stupid residential schooling situation a year ago, and we set up a holiday and all of this crap. And yet here we are, not 12 months later, the government literally talking about taxing and jailing people who want to get a vaccine that they don't have proof is very effective, right? So literally the people who are moaning and bleeding and complaining, they learned nothing. They learned absolutely nothing. They don't know a goddamn thing about a thing, right? Because we have a situation that they're bemoaning, saying, oh, wow, the government overreached, the government overstepped, and they damaged people and they hurt people's lives. And then they turn around and they go, you know what we need to do? We need the government to overreach. We need the government to overstep. You have rights? Screw your rights. The government knows best. So I don't know. I hear stuff like that and I feel a little a little bit lost, right? Like there's no control because there's no sense to it, right? That you can't talk to those people and make them see that they're the same people who would have sent those kids to the residential school, right? You can't talk to the Antifa people who are burning down cities, right? And explain to them that you're not anti-fascist, you're the fascists, right? Regardless of how you feel about other problems in our society, you can't run around burning things down and hurting people and claim that you're on the side of peace. Just doesn't work that. But anyways, right? So logic, we don't have a lot of logic going on. And it's very easy to feel like the world's a crazy place, like it's kind of insane, like it's out of control, right? And obviously it is out of control. I can't control what crazy purple-haired people do when they want to go riot and burn things down, nor can I control what self-obsessed narcissists like Justin Trudeau can do when he pretends like he's different from the guys who were putting kids in the residential schools. Meanwhile, he is literally the exact same thing. You can't do anything about that, but you can control, right? You can control the decisions that you make. That is the one thing that we always have. Well, actually, as I hopefully I did a decent job pointing out earlier, maybe we don't even control that because a lot of that comes down to mindset. But the one thing that we can control, if we've taken the time to take care of ourselves mentally and the mindset and perhaps physically as well, and our health and all that, is we can just control the decisions that we make, right? So I might be stuck in Canada. Stuck, it's the wrong word, but I may be in Canada right now. And, I might be watching massive inflation. I might be watching government and media denial of the same thing. I may be watching as policies are being put in place that will do nothing but exacerbate the problem. And I have no ability to control all of that. And I may get frustrated. I may throw my hands up in the air. And it truly does frustrate me, not because it negatively impacts me. I was having this conversation the other day. I am so not bothered by government policies because I pay too much in taxes or because they affect me. I'm a relatively young man who has paid a relatively small amount of his income in the taxes so far. And, it is what it is. Um, the reason it really bothers me is because I understand how it negatively affects people and not people like me. I'm going to be fine. I'm going to adapt and adjust and we will figure out how to make it work. But for your average person who is average, they're going to make 40, 50, $60,000 a year, and that's it. There's not going to be additional income streams. 5% per year inflation is killing that person. And it's completely wrong. In exactly the same way that taking kids away from Native American families to educate them in your way of doing things was completely wrong. And so I do get very frustrated at these things because they hurt your average person. And it's really frustrating because they hurt your average person. Your average person doesn't realize that's the source of their pain, right? And that's what really frustrates me, right? Is your average person sitting there saying, basically voting for the government to keep doing the things that are entirely hurting that person, while complaining about some wealthy people who are trying to avoid the taxes that are killing that poor person, and then they're mad that the wealthy person is avoiding the taxes. It's like, well, you should avoid them too. They're killing you. This is not a positive situation. You shouldn't wish, if you're dying of cancer, you shouldn't sit there and see someone who's healthy and be like, I wish you had cancer too, because this is, how dare you eat right and exercise. I think you should have cancer just like I do. Right? That's tends to be the mentality. But it's wrong and it's short sighted, and it deeply frustrates me. But again, I can't control any of that. The only thing I have control over is positioning. That's it, really, right? Positioning. In other words, my mindset. I'm going to give you a really quick analogy. Gas prices have been going up lately. I drive a Volkswagen Golf, very small, nice car, 1.4 liter, I think, like tiny little thing. So I put $50, or I used to put $50 in the tank, and $50 would take me from zero. And I literally drive my car until it says you have 0 kilometers of range remaining, until it said that for about 5 kilometers. I'm pretty bad about that. So I'll literally drive the car till it's completely empty. Put $50 in, completely refilled, right? Again, small little cheap car. So lately it's now like 60, 65, even maybe as high as $70. I don't really fill it up all the way anymore because I hate seeing the number go so high to fill my car up now. That's a huge increase in price. Obviously, if I go from 50 to $65, I mean that's massive, right? It's like a 30% increase. So that sucks. And obviously, probably all of you drive cars. I'm assuming, even if you don't, you buy things that were shipped on trucks and stuff like that. Like that price, it's affecting us all, obviously. Now, we live in a world that can't change the price. Just like I was saying, I can't change the price. I can only change my positioning, my mindset, my perspective. But that is a very fascinating thing, right? If the price was at, let's just say, I don't know, I was filling up for $1.25, let's say, right? And now I'm filling up for almost $1.50, so $1.47 or something like that. Let's just say those are the prices. That's what the price was at $1.25. It goes to $1.50. Okay. That's obviously bad for me, the buyer of gasoline, who has a car and wants to buy and consume gasoline. But that's really good for the seller of gasoline, right? I mean, if I bought that gasoline at $1.15 and now it's selling for $1.50, it's good. I made a good spread, right? So you can see how the movement of that price, the movement of the price of gasoline, doesn't actually matter. My position relative to its movement does. You see, if I'm a buyer and the price is going up, then I'm losing. But if I'm a seller and the price is going up, then I'm winning, right? That's true in all markets, of course, right? So in real estate, if I'm a buyer and prices are going up, then the amount I have to pay, my cost of acquisition, is increasing. And if I'm a seller, vice versa, right? I can take advantage of this, right? I can take advantage of this because you control your positioning, right? You control your positioning. So, for example, one thing that I would point out is I am very bearish on the Canadian dollar. I don't think the Canadian dollar has a bright future. If you know me well, you know already that I own lots and lots of cryptocurrency because I don't think the Canadian dollar is worth much. And I own houses because I don't think the Canadian dollar is worth much. And sometimes I look at my bank account and I see like $3,000 or $4,000 have accumulated, and I go, "Oh my gosh, I need to get rid of that money because it's in Canadian dollars and it's just burning at 5%, a quarter at times." Right? I don't want to see that. I want it to be in something else. What I really would gold, and yet I don't own an yeah, I don't own any like investment gold because it's a tricky world that I don't understand. But one day, maybe when I have more money, I'll buy some gold. It seems like gold doesn't perform well, so it's more of just a store of value. And I'm more interested in seeing my money perform than seeing it be stored. But one day, perhaps I'll have enough money that I'll more feel like just storing some of it, and then maybe we'll get some gold, right? But anyways, that's what I can control, right? I can control my position relative to the market, right? And so with the Canadian dollar as something that I am not very confident in, what are the things that I can do as a real estate investor, right, to express my lack of confidence in our government and in what is happening in the marketplace, right? Well, in this case, because I don't think very strongly of the Canadian dollar, I could short the dollar, right? Borrow as many Canadian dollars as I can, and I could use them to buy assets that I do believe in, right? And so this is one of the very important things about understanding your fundamental cash flow analysis for real estate, right? Is if you can sit down and you can look at the property and you can say, this will produce a monthly income, right? Then you can make that bet, right? It's very hard. I mean, you can short the Canadian dollar if you want with a non income producing a property, right? With something that I wouldn't consider an asset, but with a non cash flowing asset, essentially, it's just super duper risky because you obviously have to cover the costs of that building, right? And during that time, pardon me, there's a stock investing saying which says the market can stay irrational longer than you can stay solvent. And what it basically means is that if you make a bet, especially something like may have a cost that is attached with it, right? Like a recurring cost. Usually, a lot of the times when you do a short on the stock market, there's a cost, a recurring cost to keep holding those stocks for the duration of the short, right? So I said in my example, I was borrowing from Sean. He was just lending to me out of the goodness of his heart. But in the reality, he doesn't do that. He lends to me for a fee, right? So I might say I'll borrow for a month, and he might say, okay, give me 3% of my stock's value, and you can hold it for a month, which is not that much, but now I've got to pay that every month. So if you've ever seen the movie The Big Short was about a gentleman, right? Drury. He was shorting basically the entire stock market, and it's funny because they made that movie. Hollywood is so good at putting up in front of you an example of somebody who you absolutely should not follow. They are so good at that, right? They'll make movies about Warren Buffett doing some shit that you can't actually replicate. Michael Drury, the exact same thing, because Hollywood people who don't know a damn thing about a damn thing. And so Michael Drury, I mean, is he a smart guy? I don't know. There are way smarter investors than him, though he is a smart guy and he definitely, he saw the crash coming. But for those of you who don't know his story, he saw the 2007 2008 financial crisis coming. He shorted it, which means he bet against it, right? Just like I mentioned. And he made his bet like 18 months before the crash happened. And so, as I explained to you with the short, you have to pay your position, you have to rent it basically. And he basically made this bet too early. He thought that looking at the numbers he was looking at, the market was going to crash any day now, couple months. And he ended up being very wrong. It took another 18 months for the bubble to finally burst. My timeline might be a little off. I might be getting it wrong. Like, don't quote me on the exact months, but that's essentially the broad strokes of what happened with him. And over the course of those 18 months, of course, right, he was running like a successful brokerage and whatever. And he basically had to shut down his company, get rid of all of his staff, all of his employees. I think he had to get rid of his offices, get rid of everything because he had to get rid of all of his expenses so that he could afford to pay the rent on this stupid short. And basically, he got to the end of the line. Like, I don't know, maybe he could have afforded another month or two, but basically, he was about to be liquidated from his position, right? Which is what it's called when you can no longer afford to support your short and you have to sell off the stuff so you can give it back to the people you borrowed it from. He was about to be forced to do that when the market finally crashed and he made a record amount of money. I mean, he made an obscene amount of money off of that one short position, just because he was betting against, I mean, everybody, right? Right. So, but essentially he almost bankrupted himself doing it. If he'd been off by another month or two, he would have. And a lot of people did. There were other people who were just as smart as he was who saw it coming, but they just made their bet a little too soon, or they didn't have access to enough resources to maintain their short position. And so they didn't get the big payoff that he did. It can be a very, very risky thing doing what he was doing, right? And the reason for it is very simple, right? If you're using stocks like he was doing, and you have to pay that fee every month, then your stock is not in a position of cash flow, right? It's cash flow negative. It's costing you, right? And you're eventually put into a position, and they call this the short squeeze. That's literally what they call it. This is what they were doing the Wall Street bets. For those of you who were following that last year, it's called a short squeeze, right? Short squeeze is when we push the price out of the profitable range for the person who's put the short on this position, and now they must pay, right, to maintain their position in the hopes that the price will come back down to a point where they can make a profit on their short, right? That's called the short squeeze. So um it's very easy for you to get squeezed when you don't have income, right? If we change that situation completely, we flip it around, we say, hey, Drury was shorting the position, but he was receiving 3% of the value of his short position every single month. Well, then he wouldn't have closed his business. He would not have had to fire his employees. He would not have had to have liquidated his other positions. And of course, he would just hold the position until it paid off. That's what he would do. That's the beautiful thing about the cash flowing real estate is, in this particular situation, if you want to bet against the nation and against the dollar, which, I mean, depending on how long term we're talking, might not be the best bet, but certainly short term, our country is doing some silly things right now. Then you can absolutely do that with real estate. And you can do it with an asset that's going to cash flow while you're holding your short position. And so that's really, really beautiful. So for myself this year, I want to put a heavy emphasis on acquiring property using debt, because I do not have confidence in the Canadian dollar. I don't. I have no confidence in Justin Trudeau and his 50% female cabinet instead of his cabinet of just the best people for the job. Uh, I think that he and his cohort of people around him are misguided, and so I will position myself accordingly, right? And that's something that we all get to decide, right? Is what is our position going to be? And you have no position at all, right? Like lots of people, their position in the stock market is I don't know, so I don't own stocks. It's not a terrible position, although on balance, you're probably better owning index funds, right? And same thing with real estate, right? There are lots of people who they don't have a position on real estate, they just don't participate, right? And obviously participation is key, because how are you going to get ahead if you're not taking part, right? So I want to show you something real quick here. I've eaten up a lot of the time, but where did my yeah, sorry. I want to show you this property. So this is 399 Montague Avenue. If any of you can see what's on the screen right now, this property may look familiar to you. That is because I have shown you this property before. It was originally analyzed on the 20th of April of last year. It looks like. Wait, I put my dates on these for a reason, and and I don't know what the date is. But anyways, it looks like I'm just trying to read the file name at the top here. It looks like it was last looked at April of last year. The property is back on the market. So for whatever reason, the deal with this fourplex fell through. And it's pretty strange because it was on the market for a little while, but like it sold relatively quickly. So I feel like this was sold. Maybe I can actually pull it up here. I feel like this was sold. Oh, no, I'm not gonna be able to pull it up there. It's too many stuff. But I feel like this was sold quite a while ago, and somebody has been in perhaps like a long-term closing, and for whatever reason, it looks like the deal has fallen through. The reason I say it looks like the deal has fallen through is, of course, I analyzed this. I analyzed this at 649, and it is back at 649. So back on market. There we go. Here. No, that's the wrong property. Oops. It's also back on market. There. Nope. It's not there. Okay. I'm not too sure what I did, but I did another look at it. But it's basically everything remained the same. So this property came back onto the market. Purpose built fourplex. As you can see, there's actually a lot here. So it's a property with an adjacent lot. So you could potentially do some development, maybe. It's hard to say. And they want 649 for it. 649 is over the value. Pardon me. Paying just for the units, right? But I guess they're assuming there's a bit of value there in the land as well. My guess is, and this is totally a guess, you'd have to talk to a realtor. My guess is that somebody put an offer in on this. Pardon me. Probably a decently serious investor who thought maybe I can sever the adjacent land, I can sell it off, or I can develop it. But that there's a play, like a 2-for-1 play with that land. That'd be my guess. And so they probably aggressive. They snatched up the deal pretty quickly. Said we'll do our due diligence on the back end, right? Get the deal under contract, and then we can figure out if it's worth the price we agreed to pay for it. My guess is that they started looking into it, and it is not worth the price they agreed to pay for it. Now, at that point, as a serious investor, you would go back to the seller and say, "Hey, look, I know I agreed to pay you this price, but look, I've gone through the numbers. This is how I see this asset, and these are the numbers that make sense to me. I don't see how I can justify paying above this price. Can we work something out?" And the seller's either going to come back to you and they're going to say, "Hey, look, I understand your numbers look good to me. Let's talk about it." Or they're going to say, "No, I think I can sell this for this price. So if you're not interested, I'll take it back to the market." Right? Both are fair positions, totally up to the buyer and the seller. In this case, it looks like that's what happened, right? It looks like they said, "No, I can get my price," and they went back to the market, and here they are again with the market price, 649.9. And again, I think it's overvalued. And again, my guess is that they're banking on the extra land. And my guess is that the investor who tried to buy this was probably looked into it and realized either it was going to be very expensive or impossible to make use of that land. And so they were basically just buying the fourplex straight up, and it just wasn't worth that price. So you make a low ball offer, right? This is the kind of property where, first of all, do the best to understand the property that you can, right? To really make sure you understand what the cash flow is going to be and what price the property can justify, right? And then you make your offer accordingly and maybe a little discount, a little discount for what you think the fair valuation is, right? The reason I point this property out is because this is the kind of property, hold on, just so that we're clear, this property on the inside looks. There are photos of it. Do I have the listing still open? There are. No, I closed it. Oh wait, no, maybe I didn't. Yeah, I did close it. Yeah. There are photos. Well, actually, you can see in this photo right underneath the right next to that red car. I believe that is a dumpster, if I'm not mistaken. It looks like they've been maybe doing some mild work when the pictures were taken. There's a dumpster there, so they're doing some work on the property, or they were. So that's something you'd need to look into. But this is a perfect example of the kind of property that could be purchased as an asset, right? It's purpose built. It's going to do its job. It should cash flow. You buy something like this, you're shorting the dollar, right? Um, these are the things that are going to work out really, really well for your average investor. Because you're playing into the market trend, or really you're playing against the market trend with a property like this, right? in the sense of this taking a short position against the dollar. Anybody, like right now, what's happening is one of the largest wealth transfers probably in human history, right? The people who are in government all over the world, and really it's not quite government, it's a very tricky, complicated subject, so forgive me, some of my language might be broad or colloquial, and it might not actually be as precise as the real situation is, because technically the Bank of Canada is not our government, but it also kind of is, so it gets a little tricky there. But essentially the governments or the powers that be of the world, it's not just a Canada thing, have lost their damn minds. This is really not shocking when you look at the Bretton Woods Agreement and the way the world is set up. It's kind of all based on one money system, even though we kind of pretend like it isn't. So basically, the whole world is set up on the U.S. dollar, or perhaps you've heard the term the petrodollar. That's basically what the whole world is set up on. And so, pardon me. Um, when the world is not using sound money, it's not surprising to find that there's unsound principles at work, right? Um, I don't know if you're familiar with the concept of sound money. Gold and sometimes silver are considered sound money. There are other forms of sound money. The people who've made cryptocurrency are kind of trying to make their own kind of modern digital sound money. Essentially, sound money means money that the government can't mess around with, right? That they can't devalue or deflate or whatever. And it has been observed many, many times by both economists and philosophers that when you introduce unsound money into a society, for whatever reason, it doesn't seem like there should be any relation between them, but there is. That seems to introduce unsound thinking into the economy. It deranges people essentially. So a lot of the times when you have this unsound money circulating in your economy, you'll also have a lot of unsound ideas. Tell me if that reminds you of anything. Um, but essentially, this unsound money that we have currently in circulation uh, is robbing from the savers to give to the debtors. That's what it's doing, right? And we need to understand that it is stealing from the people who've worked hard and they've saved all their lives and they've got $500,000 in their bank account. It's stealing from them to give to the person today who has a lot of debt, right? Um, Pardon me. You can think that's right. You can think it's wrong. Whatever. Like I already pointed out, I think it's terrible, but I also have no control over it. Excuse me, none at all. What I do have control over is my positioning. I don't need to be a sucker with a lot of money in the bank being stolen from me. Instead, I can acquire debt. I can be a debtor, right? If debtors are the people who are advantaged, then why not be a debtor, right? Right? Why not be a debtor? So that is, as I see it, the current investing environment. Um, to me, it looks like why wouldn't you want to short the dollar? You would. And now it's just a matter of finding those assets where I can borrow and I can maintain while holding a position that's anti-dollar. And I actually think, for me personally, I can only speak for myself, and please don't take my personal position as your investing position. Think about it for yourself, right? If you come to the same conclusions as I do, fantastic. But you may come to different conclusions when you think about things, and that's fantastic too. I'm not right about everything, so this is the nature of investing, right? But for me, I look at the way that the country is behaving both politically and economically. And I think there appears to be almost a 0% prospect of anybody who's fiscally responsible being anywhere near the levers of power in the next couple of years. Certainly, if Trudeau and the Liberal government continue to be in power, nothing will change. If the NDP take power, nothing will change. If the Conservatives get power, then my forecast for things changing improves a little bit, but I'm not very confident that they'll do the right thing either. Right. And the reason is I mean, it's very simple. Inflation is unpopular. Obviously, people don't like losing value out of their savings account every single month. Right. So it's not a popular political position. The thing is, austerity is also not a popular political position. People hate it when you tell them that the services that they've gotten used to stealing from the government are no longer going to be available to them. So austerity is not a very good plan either, right? The government doesn't want to deal with us. The problem is that when you look at our government's balance sheet and you see how much money we owe, right? We're massively in debt, and we grew it. I mean, we grew our total debt load like 20% last year, right? So when you look at that, you realize that anybody who's going to step in and be responsible and raise interest rates is going to massively increase the government's debt service load. And when that debt service load goes up, the government will have only one of two choices: either run an even bigger deficit than you're already running, right? And I mean, we're getting to the upper end of how big of a damn deficit can you run, right? Or cut spending, austerity, so that you can absorb the increase in cost for all of that money that you're financing. I don't know about you, but I cannot imagine a liberal or NDP government saying we're going to scale back healthcare, we're going to scale back pay for some of these pension, right, for the doctors and the nurses and the like. We're going to scale back on educational services, on those sorts of things. These are not the political entities who are going to say that, right? And then again, looking at the conservatives, I think that the conservatives are more interested in being popular than in doing the right thing. And while they talk about the right thing, I don't think there's any political will to actually do the right thing. So I think they probably would not introduce us to. I granted they'd be better than either the NDP or the Liberals in this one specific area of economic responsibility, but they still probably would not be responsible. Right. And then if there's a party that might be, I don't know if they would be, but they claim they would be, the PPC or whatever, the purple guys. Yeah, well, they win a seat? They didn't win a seat, so they're not winning anything. So don't have to worry about them, right? So these are the three political choices. The only one who may actually do something is probably too afraid to, and the other two are fully on board team spend and pray, I guess, whatever you want to call it. Right. So yeah, I think the future looks very, very bright for anyone who holds a lot of debt. Just because our government is so irresponsible at this moment, it's so depraved that it can't act responsibly if it wants to. And so you're just going to continue to receive a discount as a borrower. Okay. That was a bit more, I guess, more of a strategic conversation than more of a tactical one. I didn't spend too much time on analyses or anything like that. I wanted to talk about the strategy because it's something that I've been thinking about a lot lately. Obviously, beginning of the year, kind of bigger picture stuff, whatever. And I feel, for me personally, I felt getting caught up in, emotionality myself. I'm looking at the market and it giving me a bit of anxiety, right? Because I can see the way things are going and they don't look good, and it's so hard to say what the future holds, and you don't want to get burned, right? But I really had to stop myself and really refocus on what my goals were and what I know and what I understand and what I can control, right? Because those are the things, those are the levers that I have power over. I have no capacity to change Justin Trudeau's mind, to change the mind of the people who voted for him. I have no influence there, right? And even if I think that we're a herd of buffalo running towards a cliff, there's nothing I can do about that, right? But what I can do is I can buy a parachute. Right? What I can do is I can buy a parachute. I might not be able to stop the herd from running off the cliff, but I can be one of the lucky few with a parachute, right? Or maybe a rope ladder or whatever. Make the metaphor of your choice, right? And so it really took me some time. I mean, some real introspection and self criticism, really, to really realize that, hey, you're being a bit of a whiny little bee, because you're sitting here caught up worrying about the things you can't control instead of focusing on the things you do have control over. And hopefully that gasoline analogy was pretty potent, right? It's very easy to look at the increase in gas prices and think of it as a purely negative event. But there's always two sides to every story, right? And the other side of that is that the guy who already owned gasoline and was hoping to sell it to you, he just made a lot more money than he was expecting to, right? And that's always true in every market, always, because it's an exchange. There's two sides to every trade, right? And so understand that. I really love also the analogy that I used there with the little story about Warren Buffett, about how he makes money because on the options and stuff, because it really does illustrate like it is that simple. Your average person doesn't believe it's that simple because your average person has never actually thought about it very hard. But it is that simple. Buy low, sell high. Don't try to buy too low. That's impossible. You're not going to get a 50% discount, but you can reliably get a 5 or 10% discount. And you can reliably sell for 5 or 10% above what you paid for something. And when you just combine those two things in some time, it's powerful. And if you combine that with understanding that you're in a market and that you have a position in that market, and aligning that position correctly to what the market is doing, then you can really, really accelerate your growth. Right? Because I think that just about any mortgage that you take out today, as long as it's on a cash flowing asset, it's very super duper important, right? I would not recommend this at all to just buy some $2 million McMansion in Mississauga. But if you are buying a cash flowing asset, I almost don't think you can go wrong taking a mortgage right now. I almost don't, because I think the money is basically for free. Especially, I mean, what was the last CPI report like in Canada? Wasn't it like 3.6 or 4.2% inflation? Something like that. It was something like that. You pay 2% interest on loans right now. So that's essentially negative 2% interest at the rate of inflation. And it doesn't quite work out that way because you don't get to raise your rent every month as inflation erodes it and stuff like that, right? Things are not quite as rosy as I'm painting them to be, but essentially you're in a position where if you've got the cash flow, you're going to survive. You're maybe even going to thrive the coming market conditions. And you really just need to understand that's about positioning, and it's about understanding the asset that you're getting yourself into to make sure that there's no large unexpected expenses you're going to need to cover in the short term that could really screw up your strategy or undermine your approach. It's now 11:20, so I'm going to call it here. I thank you so much, as always, for joining me, for you taking the time to listen to what I have to say, and I hope that it's enriched you and given you something to think about. If you have any questions, now is, of course, the time. I mean, you can always interrupt me, but now's the time as we finish up. And if not, then again, thank you so much for your time. I hope that this was helpful and insightful, and you know, I'm trying to give you some insight into how I'm looking at and approaching the market and what I'm seeing, and I hope it helps you to clarify what you're seeing. Right? It's one of the beautiful things about a marketplace is we all get to have our own perspective. We all get to have our own perspective, and that creates the overall market. And your perspective, my perspective, is not necessarily any better or worse than yours. We all get to bet on our perspective. So if you didn't agree with some of the things I had to say, hey, by all means, right? We don't need to see the world the same way. You can totally bet against me. I'm all for it. I just want to see you, having the confidence to go out there and make your bets on what you do believe, and participating in the marketplace, because I definitely think, if you were actually actively betting against me, I think you'd lose, because I think I'm mostly making winning bets. But but in general, I think betting on the market, you're going to get ahead, right? The person who sits on the sideline makes less money than the person who's involved, right? So anyways, have a wonderful day. Thank you very much. Yeah. Industry.